ladies and gentlemen, coming up next is a very fascinating interview, especially in light of what's happened over the last 48 hours. I'd like for everyone to please welcome Ms. Cynthia Wu, founding partner at Matrixport, and Mr. Ran Yi, head of ecosystems over at Wu Network. We have a very interesting discussion today to talk to everyone. Originally, we're going to talk a little bit more about infrastructure, but you know what, given what's happened the last 48 hours, Cynthia, Ran, I'd love to hear your thoughts on what's going on. And then maybe we can dive a little bit into what your teams are doing right now on the prime brokerage and the liquidity space. Cynthia, maybe you can just give a quick one about Matrixport, and then I'll also ask Ran as well.
Morning, everyone. Can you hear me?
Yeah, we can hear you fine.
Okay, great. Yeah, good morning, good evening. I'm actually dialing in from Miami, so it's pretty late here, but I get excited again after hearing the first panel. So I feel disappointed that I cannot jump into the discussion or participate into the votes.
Oh,
I'm
I
my
think you,
part
you
now.
put your name in. You put your name in for the next fight, Cynthia. We'll get you in for the next debate. That'll be coming up in July. So we'll line it up.
I will do my part now. So thanks for the screen time. Yeah, so nice to meet you, everyone. So I'm Cynthia Wu. I'm founding partner and currently head up the business development and sales at Matrixport. So Matrixport is a one-stop financial services company that we provide all-in-one financial services, including institutional custody, trade execution, asset management. And also we have been building rails in DeFi by helping the institutional client to get into DeFi and also providing financing for them if they want to do trades in DeFi. So this is definitely a very historic moment we are in the past 48 hours. And definitely, I mean, Miami today, like meeting a lot of institutional clients, hedge funds here, and every conversation end up becoming a discussion about the future and the reflection about what's really happening in the market now.
And what's the temperature like over there in Miami, Cynthia? Because there's a lot of big events happening in the US around crypto. I'm sure everyone's talking about this. A lot of people probably looking at their bags. What's the temperature like? And more importantly, what are they talking about in terms of the future for Luna? And this is critical because it might have implications for other protocols as well.
Yes, I think the overall sentiment here is still quite unstable. I think people are, to some extent, didn't expect this to happen so quickly, so fast. There was a lot of discussion and doubt about how this kind of algorithmic stablecoin would work. And there was a lot of a discussion about the potential runaway risk, right? The bank run that would happen if things really deteriorates in a very basically reflexivity, right? And that actually happens right now, and the scale and the scope of this market turbulence and potential damage could be more profound than just the price of Luna and UST. So I think people definitely there's a lot of fear in that. We have seen institutions getting out of the position regardless of the cost, right? And that caused further damage and price correction in the market. And there are also a lot of discussion around how OCC is going to regulate this space, right? Given has been one of the top 5 stablecoins, and this could really kind of put on the entire market and the regulator on the very cautious mode, right? And that could really trigger a more timely and stronger stance of regulation of cryptocurrency and also potentially DeFi in general.
Yeah, I'm just going to hop over to Ren here. Thank you so much for that quick one, Cynthia. Ren, why don't you just give a quick brief about Wu Network, what you're doing? And then I'd love to ask you the question on, would regulation stop a run like this?
Sure. Wu Network is a centralized and decentralized exchange. So we're a network because we have a variety of products and it's focused on liquidity. So we're focused around low cost execution for all the members of our platform for trading there. So we can get up to 0 fees if you stake a bit of Wu tokens on WEX, or you can trade on WuFi, which is our decentralized exchange. In addition, we also have a ventures arm that actively invests in ecosystem projects. And we have a DAO as well for Wu. Our first company who founded Wu is actually called Kronos Research. In that way, we're a trader. So we specialize in algorithmic trading strategies, particularly high frequency trading across centralized and decentralized exchanges. So in that way, you can think of us as like a jump or even Alameda on the trading side. And then the exchange is kind of akin to their FTX. So that's us. And we have about 230 people across the world in many countries around the world. Thanks for having me here.
Yeah, good to have you.
Oh, thanks. And your question is, will the Fed stop this? Will
No,
regulators
no.
stop this
The
fraud?
the 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 question is, well, I have a couple of questions. The first, Cynthia made a point earlier about this is going to trigger a lot of regulation. But as I kind of mentioned earlier, somebody brought up a good point. You get runs on pegs all the time, even in traditional finance. At least historically, Asian financial crisis was one. Hong Kong dollar was an attack on that, and there's a lot of work has to be put into defending this. I think the question I have for you from your perspective, and you might not be the right one to ask, but what are your thoughts? Could regulation stop something like this? Would it help runs like this or attacks? Or is it something that's sorely needed?
Yeah, I think regulations around stablecoins definitely make sense. It's not perceived as a risky asset, especially given that a lot of crypto participants are retail. They're looking at yields. They're looking at, they assume it's stable. They don't have, there's a lot of opaqueness to the level of transparency. I mean, even for the institutional investors in this case, right, of Luna UST. So I think regulations are definitely a good thing for stablecoins.
Yeah. From an infrastructure point, does an event like this test the rails? And it is something that everyone's still building. We're still building. And I think it's safe to say, at least for most of the audience members from the last poll, there's still a lot of bullishness in the technology and in the space. But from an infrastructure perspective, how does something event like this test the pipes for what your clients are trying to do?
Sure. It's a very good question. I mean, I think this because of the market or crypto market is very volatile, right? So it's almost like you are always testing your beliefs, right? When things are good, a lot of things will happen faster and sooner. A lot of money being poured into the space, and there's FOMO from retail or institutional level. So you feel that everything could happen, right? Gives people that at least that hope or sentiment that things would happen. But when things kind of turn sour, especially under the current hardship with the implosion of one of the biggest stablecoin and also being the general sell-off of a Bitcoin of the reserve currency, which involve Bitcoin, Ethereum, and some other stablecoins as well as other layer ones, as well as a overall like interest hike environment in the US. So it kind of like a few difficulties layer over each other will give people of the market kind of a very pessimistic thinking environment. So people start to doubt. But what I believe is that the industry's innovation will eventually dictate how far this industry would go. So that's why I find it very interesting about one of the posts you did in the first debate session is that do you think the Fed is going to eventually have a say of like when crypto winter ends? If I were able to vote, I think no, because this industry has its own vitality, has its own innovation power. It does not exist or prosper because someone allowed it to. It's because its innovation and its permissionless nature, where a lot of innovation could happen like ground up, right? So I really that's my fundamental belief of this industry, and that's also the reason why I joined the industry, which I'm sure a lot of the people why they feel this industry is exciting. So even though there might be temporary difficulties, but in the long run, I do not see the institutional interest about participation into DeFi slow down or ends because of this.
Yeah.
And let alone that I believe at certain point in time, Luna Foundation is going to stabilize their situation, maybe with a much slower pace of growth, maybe with a much smaller AUM, but they will find a balance like to back up their currency as long as the foundation does not give up hope. So at Matrixport, we still take that fundamental belief that we still, as a service provider in this industry, we're still building the rails, right? Last year we added a DeFi connector on the Capital's custody, which is our custodian solution. And immediately we have seen like more than 100 interested hedge fund or VC that come to us, want to use this tool to participate into DeFi. I think that interest probably will slow down temporarily, but it will not come to an end.
Yeah, I certainly, on the flip side to situations like this, a lot of institutions who have been waiting on the sideline for an entry point, I do get a lot of messages saying that this is a great point to start a book and to build a portfolio because the asset class, as volatile as it is something that's hard to enter if you look at the last year. But now is a phenomenal opportunity. We also represent China managers and emerging markets across Asia. institutional investors from Europe and US are always looking for an entry point given certain valuations. Where business has been very good in terms of setting up new funds because this is a great time to build a book. On that note, Ren, let's look forward and look more optimistically. Working with clients, what type of strategies do you see would do really well in an environment like this? And how would you advise them?
I think trading is still quite profitable in crypto. I mean, there's a ton of volatility, especially a day like yesterday. Our strategies range anywhere from market making to arbitrage to systematic trend following to even options trading. And we trade on mostly a prop basis. So we trade across CeFi and DeFi. I think like you're seeing asset managers, hedge funds pouring into this space from HFTs to traditional asset managers. Once they can get over the hurdle of like custodians, custody, and just counterparty risk, then a lot of trading strategies, I think it makes a lot of sense, as does for us. And especially in newer markets like on DeFi. So on Texas, where we actively trade, there's plenty of opportunities. I think the infrastructure will develop and there will be a lot more volumes and users from around the world in DeFi. Some may be permissioned, like what Cynthia was talking about and what a lot of chains are building. Some are just public, but there'll be plenty of opportunities for trading and even farming, which is just generating passive yields. So I think there's a lot of opportunities and it will be even more in the future.
Cynthia, I want to talk a little bit about your work in the DeFi space. It is one of the critical points that our institutional investors are talking about is there's generally a fear of building out pipes with DEXs and non-custodial wallet structures, as well as just the decentralized nature of it. And partly one is the hacking risk, and number two is the just exploits or technology barrier that they need to surpass. So two questions. One is that pushing appetite more towards a centralized solution, or are you finding other ways to help your clients feel comfortable moving into that decentralized space and the security risk it involves?
Sure. I think I just want to echo what Ryan has said. I think there is still plenty trading opportunities in the space. Definitely, it's a different trading environment compared to last year, the bull run, right? Last December, last Q4, before market corrects, you probably see most of the hedge fund they were doing basis trading strategies, market neutral strategy, and then easily turn out like 50-60% annualized yield from that relatively simple strategy. So you see everyone is doing that. So that's kind of easier money to make, right? This year, the environment is difficult. The yield has come down across the board, right? And especially the trading opportunity around the centralized exchanges in the past few months has been pretty lackluster, right? Because of the volatility has gone down so much from last year. So that's part of the reason why a lot of the hedge fund is looking into DeFi, right? It's really the stick to seek the alpha. So what we have seen overall is that last year, most of the people, hedge fund that we talk to, they are concentrating their trading on centralized exchanges. They're probably doing some experimental work or strategies in DeFi. And this year, more significant portion of their AUM has been deployed into DeFi because they still want to look for it's really alpha seeking. So because of that, that kind of drives the needs of infrastructure building, right? What kind of a typical tools that or problem they face that need to be solved, right? For institutions to really comfortably deploy asset there. The first is definitely secure access, right? They need to securely deploy their capital into DeFi, where they're also institutions. So it's not that it's one single trader who can just use MetaMask however he wants and then transfer money to whatever smart contract address that he wants, right? That's basically it's no control environment. If it's institutions, the fund need to make sure that the trader does things that the fund wants, right? Does not go beyond that boundary. So there's a lot of risk management, internal control, role-based control, risk management measures or tools need to be in place to allow them to actually deploy funds sizably as an institution. So that's second. The third, I would say, is definitely the risks. DeFi is not free from risk, from the smart contract risk to the rug pool risk. So I think most of them, they do their own research on deciding which DeFi is more safe to deploy with from the counterparty risk perspective. They will do their own research, and they will probably do some level of research on due diligence on the security, how secure that smart contract is. And we came in by providing an additional layer of security audits for them, right? So for the trade that they deploy under our Prime services, we actually will have our security team look at those protocol again as well. And we might build some additional whitelisting tools to say, okay, only certain coins in this protocol is allowed to trade, and also only certain, it does not go to a random third party smart contract address. So those kind of, we kind of help to build a slightly more gated environment so that they feel safer to deploy asset into it. So,
Yeah, I think that last point is really important, because if you go back 2 years ago and you spoke with an exchange or a team similar, they're like, look, buyer beware. This, you set up the pipes and you do your own counterparty risk, but we're not going to evaluate the protocol. It sounds like you're also helping them give research and evaluation of the protocol as well.
Exactly. We cannot promise that we will eliminate all risks, because this environment, smart contracts, is the more complex layer of risk, but we will do more due diligence on top of that. And we have a professional team that focuses on that, the experience. So that help them to limit big risk, I would say. So that's I think that's another kind of pain point we're trying to resolve. And I think that definitely help to bring a more friendly environment for or readiness for the institution to access DeFi. And lastly, it is sorry.
No, go ahead.
Okay, lastly is a financing, because previously we were providing prime services for them on centralized exchange, right? Binance, FTX, Coinbase, whatever the main exchanges. Now imagine part of the portfolio and part of the strategy is in DeFi. So for one strategy, they could deploy capital in DeFi at the same time as in CeFi. So they basically need financing for both. So we've been trying to provide them and view their overall portfolio as a whole, right? And do the risk assessment of the portfolio's neutrality and risks parameters as a whole, view that as a whole, and provide them financing leverages of that overall portfolio. So I think that's going to be more interesting for more hedge fund that we talk about, because that's something that I think.
Yeah, I think the leverage is very important, because the on ramp for crypto is still very, very full of friction. It's very, very still has quite a bit of friction to it. So having access to that leverage easily and quickly is something that hedge fund managers definitely need. Is there a gap sort of between traditional FI and DeFi and new FI that you think needs to close for that leverage to that sort of like the risk management to be as robust as you would say for a prime brokerage?
Yes, I think for DeFi, there's a lot of asks or demands, market demands about portfolio monitoring and risk monitoring in DeFi. So I think there are some interesting firms I have seen in the market who are building out solutions for that. And that definitely is very valuable, because I mean, eventually DeFi is going to be part of your CeFi strategy as well. So people a hedge fund might as well want to view their overall positions and risk exposures in one place, right? So whoever can provide that would be able to best service the industry.
Okay. Hey, Ren, we were talking earlier before the show about protocols in top 10. And even in our last discussion, we talked about the emergence of Luna, which is the world has obviously changed right now. And when you look at the new protocols or even the L1s that will house the new protocols, one of the previously the discussion was who's going to be the next ETH killer, who's going to be who's going to be building protocols on new chains. And the L1s that are out now, a lot of them are kind of taking different positions, right? Like Solana has its more consumer, high consumer kind of transactional type of positioning. And then you have AVAX more institutional in a way. We've seen a lot of movement in a new protocol called NEAR. And I understand that your team has been working a little bit in this space. Why NEAR? Why a smaller protocol, which I don't think it's top 10 yet, but it's definitely moving in that direction. And is this something that institutions are asking for?
Yeah. So we really like NEAR. We actually incubated a project with them called the Orderly Network, which is like a Serum plus DYDX on NEAR. It's essentially a decentralized protocol that services the middle layer, which DEXs can build on as modular pieces. And Dexes can take like a risk engine and a spot order book and a perps order book and just build on top to create their own DEX to service as we're trying to be the price discovery platform and the center of liquidity for the Near ecosystem. We like Near because of a few things. I mean, we're actually introduced to Near by one of our investors, Dragonfly, who invests in Near as well. And Ilya, the co-founder there, we thought the team was very, very, very bright, very smart. A lot of ACM winners, but they're like, well, I would call them genius, but they're very humble about it. But then there's a big team of them, like of engineers. So, and they have a grand vision of servicing 1 billion users, right, on Near. So I would say it's not necessarily institutional, but they're doing everything from DeFi to NFTs. Kind of every chain has this, right? DeFi, NFTs, gaming. And the core selling point there is technology, right? And the transparency of the technology. So then from developer docs to, they put heavy emphasis on user friendliness for both the user side and for the developer side. So it's Rust-based, right, for native Near. And they have an EVM bridge called Aurora on top right now that supports EVM connections. And they're doing these shared liquidity across the two as well. So, I mean, we think it's that they have this technology called stated sharding, which helps essentially process transactions faster, but still maintaining security. So then that's kind of the Near overview. And we really like the team. The tech seems good. And recently we established a partnership late last year with Wu. And then we're building this new protocol with them. We're incubating it. And since then they raised quite a lot of capital. I think around 500 million-ish or 450 from a lot of top names in crypto like Jump Out, Three Arrows, these types of guys, Tiger. And we're all bullish on the ecosystem, right? And those guys have also invested in Orderly, a lot of them. So yeah, we're very bullish on Near. The team is great, tech is good, and now they're just building out the ecosystem. And so we think it's early, and we think they have.
Is this is this a protocol that you're bringing to your clients as well at this point, or is it still too early?
Well,
It sounds like a prop project that you're working with them to build out. Are we still in building phase or?
Yeah, it's coming out. There will be some things pretty soon that people can see. And so you can imagine just connecting with a Near wallet and then being able to have like the same sort of and performance as like a centralized exchange on Near, which is decentralized. So I mean, in general, there's a lot of exciting projects developing over there, and yeah, we're quite bullish on them. And
when I look at these protocols like Near, institutions they typically like to stay with the top names, but there's definitely an advantage with newer teams that have stronger or newer, like an open palette and a stronger technology as competitors. I guess even if you look at Solana, which crashed like 7 times last year, you still have a lot of institutional investors coming in, and there's a debate on whether or not it's centralized. So when you look at Near and how you position it, how do you position it against these other incumbents, or is there enough pie for people to consider?
Yeah, I mean, I think it's very difficult to sort of determine which chains will win out in the kind of the race for layer 1 and even the layer 2s. I think there will be quite a few. It's probably similar to like an oligopoly instead of a monopoly. And all the chains are trying to do what ETH can't handle for now, including layer 2s. Near is Rust based, so it's not like an EVM type of chain. So it's more similar to Solana, same programming language, but it's very developer friendly, and there's a lot of documentation, so people can easily do it. And you can see it through the number of unique contracts on Near. It's growing in like a kind of an exponential pace. So people tend to like it, especially as some of the other layer 1s are stalling recently, right? So,
ladies and gentlemen, this is a live and interactive. So if you do have questions for Cynthia or Ran or our panelists, please feel free to ask. The whole objective here is to help institutional investors make decisions on how to position themselves, whether you're a hedge fund manager or an allocator. Cynthia, I want to talk a little bit about, you mentioned earlier about Prime, and we're talking about how we're moving into kind of like a white glove service for some of these investors. When you're sitting with a new allocator coming into this space, surely do they have a strategy in mind yet? Or are they coming to you with an open book saying, look, I have no idea how to get exposure. Can you build it for me? and just give me the yield, or what does that interaction look like?
Yes, that's a very good question. Actually, there are different type of asset allocators, right? The private asset allocator, like high net worth individual themselves or their family offices, which is a smaller kind of owner-owned and dictated entity. Or there's a larger asset managers, and you have crypto manager and non-crypto verse asset manager. And you also have more like traditional real money manager, like lifers, like endowment fund, pension fund. So their appetite is definitely very different, and their level of risk taking is also very different, and their understanding of DeFi is also very different. So that probably will put them into different buckets, where for the high net worth or family office type of clients that we have seen, they are more willing to take risk because that's their own money, right? They don't have fiduciary duty to anyone else, right? They just want to, some of them want to get some exposure and learn, right? They're not afraid of losing some of their principles, but they want really get into more varieties stuffs, right? Structured product, fixed income, even buy some altcoins, right? Or private investments. So you want to get different flavors and get a feel what this market is really about, or even owning some technologies. And then or investing to like systematic arbitrage funds. Right. So these are the investors that when we talk to, we will have a lot of discussion, like two-way discussion, bounce back ideas to them.
Okay. So let's stop there for a second, Cynthia. So our allocators are typically fund of funds, actively managed. They're looking for structural trade ideas. How do you service guys like that? Because these are those who aren't just looking for beta exposure. They're looking for trading type of strategies that have inefficiencies. This is, and you mentioned that you can give exposure to your building of the rails. Do you have this in-house, or do we have to look elsewhere for that with specific managers, sort of like the teams that we're talking to in the last panel?
Yeah, sure. So basically, we have three different type of strategy. One is just fixed income, and this is just giving them yield, which we generate yield through institutional lending. So that's probably the most vanilla product. And actually, recently we've been talking to some traditional licensed asset managers about product collaboration on that, because they are just looking to have a high single digits like stablecoin US dollar denominated yield. So that's something that suits their appetite. And some other investors, they would like to get access to DeFi, but they do not want to do DeFi liquidity mining themselves. So then we provide the white glove services, what we call DeFi, centralized platform like ours, and to provide DeFi liquidity provision across like 20, 30 different selected protocols that we due diligence. And then we feel comfortable with the strategy. And it's relatively more vanilla, not very sophisticated strategies, but aggregately it gives them probably a low double digits yield, right? And then we'll pass on majority of that yield to the investors and only charge a small service fee. So that's a second type. Then the third type, as you said, are probably fund of funds who are looking to invest in active managed fund. So currently we do not do proprietary trading, but we work with the likes of Ryan's team and some other team to provide a selection of strategies for the investors. Because our main value proposition here as a platform is really that we can access those different asset strategies, be it arbitrage strategy, be it market making strategy, or some other strategy or DeFi strategy. We would be able to access those in our prime brokerage, right? Basically in a risk controlled manner. And then we give those yields to investors who find those strategies interesting for them. Yeah.
Okay. Rand, I have a question for you as well, Cynthia, but I'll start with Rand first. When I'm taking a step back and we look at this space and how competitive it is, one of the observations I have as a hedge fund platform representing emerging managers is that strategies, asset management, and financial institutions have a regional edge, meaning that if I'm based out of Hong Kong or Singapore, my competitors in this space are typically going to be in Asia, and we can sort of position ourselves as having boots on the ground advantage over global players. When you look at your business right now, the crypto is a global business. It's like FX, and it's very, very competitive, both from an innovation perspective, a technology perspective, and from human capital. How do you see yourself maneuvering and positioning yourself and defending your moat, so to speak, as adoption comes in? And I guess, yeah, in short, what keeps your team awake at night when you're building?
Sure. Yeah, the crypto space moves really fast, right? There's a ton of innovations happening. Things like DeFi are still early. There's like DeFi 1.0, 2.0, 3.0 coming. And the infrastructure is getting better and better. And there's a Lego effect in DeFi where people can build on top of each other. And then the applications are getting more and more UX friendly for retail. We like the trading side, we're lucky that we started early. So we started in 2018. So then we have a ton of infrastructure and relationships set up with the exchanges, the DEXs, et cetera, for capital, for fees and such. So we do have kind of a head start there, but as the bigger players going in, we're also aggressively hiring. We're actively investing in strategic deals for us to just have aligned interests with the platforms that we trade on. And we explore a variety of different strategies as newer things come online, right? Like NFTs, we're exploring NFT trading, DeFi. We're relatively early to that. Like we're one of the larger DeFi traders out there, I believe. So I mean,
Back to your point about sorry, not DeFi, but NFT trading. I was surprised that your team is moving into this place. In the last poll, we actually said a lot of people felt NFTs are not ready for institutions yet, but obviously you have clients who are asking you to help with these types of purchases. Ironically, it been impacted by the downturn, but its prices have held up relatively well, surprisingly. So where do you see the future in NFT trading?
I think it's going to be huge. NFTs are still, again, early. It's more about the PFPs currently, but those things are more rare and there's higher volumes, but it's not that liquid. So there's gaming items. There's all types of more common NFT. We don't have any AAA games yet, but it's coming. So we're pretty bullish on that. I think that there's going to be all types of very interesting financial NFTs. So we're just looking at it at this point, but I think it's really interesting. I think there's certainly lots of opportunities.
Yeah, I think
There.
financial NFTs is especially, I don't know if our audience have been keeping track. Moonbirds was basically a VC capital raise. We don't know what the project is about, but it is essentially direct to market VC capital raise. But financial NFTs and in terms of securities instruments, which might draw in regulation, it sounds like it might. That looks like it's an area that a lot of people are looking deeper into. I'm not sure whether the liquidity is going to be there yet, but there's definitely a lot of excitement. Cynthia, what's exciting for you right now, specifically in either the sub asset classes or protocols?
Yes, I think this year we invest a lot of resources and build the know-how as well as build the infrastructure in DeFi. We are chain agnostic, so we're not going to be like picking a chain and only do it work there. We are going to support all the major chains and uprising like chains as long as there's a sensible ecosystem where we feel there's traction and there's a good level of innovation there. So from that perspective, we are more like a service provider where we enable ours. Like you can think of us as a DeFi enabler, right? Enable others to access. So definitely, if there's a clients need us to add certain chains, and we feel that's a sensible us, we're going to do that. Right? It's just what we do, right? So and coming back to your first question about do we think that crypto business has a regional edge? I think yes and no, right? It depends on what you do. Like if you're a proper proprietary trading firm, then probably it's really you are competing with global landscape because people are after the same kind of alpha everywhere, right? No matter where you sit as a team. But for a service provider like ours, right, it's a lot about clients services and communication. So there's some like service level service elements in it. So having the local presence and being close to the client, knowing what they want and be friend with them. And so they can tell you what's their pain point, what's holding their back, what's their fear. And that would imply a lot of understanding of the market and like you can sense or smell market opportunities from there and potentially build products that does not exist yet. So yeah, from that perspective, yes, I think having a
Regional
local
presence,
kind of
yeah.
knowledge and presence is very important for us to do a good job. Yeah.
Yeah, well, that bodes definitely very well for our friends here in Asia. A lot of them, there's a tremendous amount of innovation coming out of Hong Kong, Singapore, and other parts in Korea as well, despite slower regulation. So to that, thank you very much, Cynthia and Rand, for your time today. It's been a very, very insightful discussion. I know you guys have a lot of work to do in the back and working with clients to help them through this very difficult period. But on the plus side is I think a lot of clients are happy that you're here because without people like you and teams like yours to get them through challenging markets. Like, you really can't have institutional investors coming into play. So looking forward to working with you guys in the future. And Cynthia, I'm going to mark your name down for the next debate.
I mean, thank you.
Thank you. Thank you, Ren. And we'll talk to you soon.